Welcome, curious minds, to another deep dive. Today we're digging into something pretty fascinating. Our sources brought up this whole dynamic between traditional value like gold and the new digital kid on the block, Bitcoin.
Yeah, it's often framed as this big showdown, right? Old versus new. But what we found in the research is, well, maybe a bit more nuanced than just a straight rivalry.
Exactly. So we've gone through a bunch of articles, some analysis, trying to get a handle on it. Our mission today, let's unpack those arguments, look at how they actually play out in the real world based on what we've seen.
And figure out what this coexistence potentially means for you and, the bigger financial picture.
Okay, so let's start with gold. The sources really emphasize its staying power, don't they? That physical, tangible thing you can hold.
Absolutely. It's that safe haven idea. When things get shaky economically, people and even central banks, they trust gold. It's got centuries of history behind it.
That historical trust is huge. You can't just replicate that overnight.
No, you really can't. And central banks holding massive reserves. That speaks volumes about its role as this sort of anchor in the system.
But then enter Bitcoin, and our sources paint a very different picture there. Speed, borders, just gone.
Right. The proponents really hammer home its utility for transactions. Fast, global, skipping the middleman. It's a completely different proposition.
And that decentralized part, that's key, isn't it? No single boss.
That's the revolutionary bit, according to several reports we looked at. It operates outside traditional controls. Think about financial inclusion. It offers access in ways gold, being physical, just can't match for like quick digital transfers across the globe.
So it's not necessarily about one being better, but maybe different tools for different jobs.
That's exactly where the analysis seems to lead. Our sources started shifting towards real-world examples, and that's where it gets really interesting.
Yeah, tell us about those. We pulled out some examples, right?
We did. For instance, there was this case in a developing economy, small entrepreneurs using Bitcoin on their phones, simple phones, for cross-border trade.
Cutting out bank fees and delays.
Completely bypassing them. That's Bitcoin showing its strength. Transactional freedom, accessibility. But then you look at places with, say, geopolitical turmoil.
Gold becomes king again.
Pretty much. People needing to preserve wealth, maybe needing to move. Gold is portable, universally recognized. It's that stability factor kicking in during a crisis. Two very different needs met differently.
And it wasn't just extreme cases. The sources mentioned everyday stuff too, right? Bitcoin for online payments, coffee.
Exactly. Low cost, easy for digital natives. But gold, it still holds that deep cultural significance, that long-term store of value people put in, investment portfolios for the long haul. It connects back through history.
So the picture emerging from all this data analysis, it's less about a fight and more about synergy.
I think that's the powerful synthesis, yeah. The world seems to need both. Gold teaches stability. Its legacy is undeniable. Bitcoin, it unlocks freedom, innovation, efficiency in new ways.
Not rivals, but allies. That's quite a shift in perspective.
It really is. The core message seems to be that the past and the future can actually work together, especially if it helps people manage their assets and transactions better.
So wrapping this up, the question for you listening is maybe to think about this idea of harmony between opposing forces. Where else in your world, beyond just finance, could tradition and innovation, things that seem totally opposite, actually find common ground and work together for a greater good? Something to think